Now, minority balance in the control account. Normally, a trade receivables account, what balance are they? The debtors? They are the debit balance, right? But occasionally, or in very rare circumstances, they could have the credit balance, okay? Why is that so? Let's take a look at the example, okay? You see, Akila settled her account 400, okay? So, this is her balance, and then she pay, okay? She settle her account and then sells, okay? This one add up to this one add up to 400, okay? This is the amount she owes, okay? Her balance 120, and then new sales to her, so add up to become 400, and then she pay for all of it, okay? 400. Now, but what happened is that after that, she returned, after she pay for everything, she returned some of the goods because they are damaged or whatever, okay? So sales and then return, okay? Sales return, so $20. That's why if you balance it, you can see over here, credit debit. Now Akila become a credit balance of 20 because she has already settled everything owing, and now she returned the sales of the goods. She returned some of the goods, okay? That's why now she become having a credit balance, okay? Similarly for the trade payables account is also the same, okay? Normally a creditor account, do they have a debit or credit balance? Yes, normally they have a credit balance, okay? They have a credit balance, but this one is the rare minority, okay? It's the rare circumstances when the creditor can have the debit balance, okay? So a trader settle account in full, okay? This is the opposite of the one just now. So our balance, it has 200, okay? And then we purchase from Amil again 480. So 680. And then we pay to Amil, okay? Bank, okay? Amil receive it. So no more owing. But after that, we purchase and then we return, purchase, return or return our $50, okay? So as you can see, carried out brought down. So you can see Amil account have a debit balance, okay? Minus. Okay. Such cases of credit balance in the trade receivable account and debit balance are rare, and the amount is usually very small, okay? These balances are also reflected in the control account, okay? Control account. Now, control transfer, okay? A contra entry is when you transfer from the sales ledger to the purchase ledger. Can happen when a customer is also a supplier. Okay, so you can see here Iza and Zain. We sell to Iza, okay, but at the same time we purchase from them, okay, so that makes them a customer and also makes them a supplier, okay. So instead of settling two accounts separately, the business offset the two balance by making a contra transfer from the smaller figure to the bigger figure, okay? So now you can see over here, Iza, customer we sell to him 100, and where Iza here, and then at the same time we also purchase from him 2,000, okay? So this is the smaller one, okay? We offset by making a transfer from the smaller figure. So we contra, meaning we transfer it to the purchase ledger, okay? So 100 here, contra, transfer to the PL, purchase ledger. So purchase ledger, you will have a contra here, entry, we write 100. So meaning to say, actually, you are supposed to pay Iza 200, but you minus off 100, okay, because this is plus minus. So you are supposed to pay him 200, but you minus off 100 because from the sales to him, okay. So now the balance is 1,900, meaning to say you owe him 1,900 less, okay. So this one is the same or not. Explain again, okay. It's the same, okay. This one basically is again a summary of all that we have talked about. I will not go through, okay, just the keyword. This one is the same, okay. If you want, you can read it by yourself, but I'll just go through the very important key points, okay? So the steps in writing out the control account in the general ledger. So number one, from the list of the balance, you determine whether this particular item should be recorded in the debtor control account, meaning to say the trade receivable, or we call the sales purchase sales ledger account, and we write as D, or the creditor control account as C. Creditor meaning the trade payables, or the purchase ledger control account, okay? So we just put it as D and C for simplicity, okay? So you take a look at the example. They give you a list of balance here, so you just write, okay, sales ledger, this is about the debtor, you write D. Purchase is about the creditor, you write C. Okay, purchase is for the creditor, you write C. Sales is for the debtor, you write D. Return inward is for the debtor, return outward for the creditor, okay, and so on. Okay, you write for everything, okay. Transfer of debit from sales to the purchase, this is the contra, so involve both of these, okay. You just write this, okay. Step 2. Follow the nature of the account to record the items. So for the debtors account, they are asset, so that they have a debit nature. So debit is increase, credit is decrease. So creditor have a credit nature. So credit is the increase, okay, and decrease for the opposite. So number 3, okay. Okay, step 3 is about the contra, okay. So take note that for the debtor control account, the contra, okay, or transfer will always be on the credit side, okay. Credit, okay, contra here. Whereas for the creditor control account, the contra will always be on the debit side over here, okay. Just to take note the important points, okay. So now this is a work example how to do it, okay, step by step, okay. Now the common mistake I'll just very briefly go through because this is quite important. So now the common mistake number 1, can I use this one to highlight? No. Okay, it's okay. The common mistake number 1, okay, not deducting the cash sales from the total sales when calculating the credit sales, okay, because as already we have learned before, you are not supposed to include the cash sales because this is the debtor account, so it's only the credit sales, okay. Not deducting the cash sales from the total receipt from all the customer when deriving the payment from the debtors, okay. Not withdrawing cash discount allowed when the dishonor check occur. What else? Okay, meaning to say when you make payment, okay, then you have a discount allowed, right? So you actually pay less. But when your check was being bounced back, you need to withdraw back the discount, okay, the discount allowed. Treating cash discount allowed to debtor as cash discount received from creditor and vice versa, okay. So for the debtor is the discount allowed, for the creditor is discount received, okay. Treating carriage inward as carriage outward and vice versa. So you have not come across these 2 terms before, but just so you know, carriage inward is the inward. You see the word in? Transport coming into us, so it's the transportation cost in bringing the goods into the business, okay. It's the transport cost when you buy the goods, okay. Carriage outwards, you see, transporting out. Carriage, you can think of it as a transporting out. So it's the transporting cost when you sell the goods, okay, sending the goods to the customer. If you're not sure, you just write carriage, okay. Carriage, you see here, you just write carriage. You see, carriage, this is the creditor, okay, so carriage will increase the amount owing to the creditor. So we call the contra, okay. Contra is to offset, okay. We have already talked about this, including the provision for bad doubtful debt or bad debts, okay. This one we should omit, okay. We only put the bad debts inside, not the provision. We will cover this topic at the later stage. treating trade discount as cash discount and vice versa. Okay, basically, we are just going to include the cash discount, which is the discount allowed and the discount received. Okay, but let's just to recall over here, the trade discount is the discount given off the list price and is given to encourage bulk buying. Okay, buying in a large quantity bulk. Whereas cash discount are given to encourage prompt payment. So if you pay, if they give you a deadline like within 3 days you pay, and then they give you the discount, okay, to encourage the prompt payment. So a transfer or a contract is to offset the balance. Okay, you transfer from, for example, from the sales ledger control to the purchase ledger control. Okay, is when that person is both a buyer and the seller. Okay, then we can have the contract to offset. Okay, so we will transfer from the smaller amount to the bigger, we will transfer the smaller amount to the other account, okay. So you see, as I said already, from the sales ledger control account, the control is always normally always on the credit side, and this one is always on the debit side. Okay, so that's all for this topic. So coming out, you'll be concentrating on the exercise relating to this. Okay, I think this is quite very easy topic, as long as you are familiar with the double entry around the debtors account and the double entry pertaining to the creditors account. Then you will have no problem with knowing all this, whether is it on the debit side or is it on the credit side, like that. Okay, so I hope you can understand well. Thank you.